Hello everyone, my name is Ben David from eSignal. Hope everyone is having a great day. Before I go further, I need to perform a sound check. In the left-hand margin, you will see a chat window. Can a few of you please type yes or Y if you can hear me? All right, great. A few more logistics before we begin. If the audio is not clear or if you hear an echo, my suggestion is to try logging off Adobe Connect, then log back on. Unfortunately, there is not much else we can do to troubleshoot any audio or video issues you may be experiencing. That is why I suggest logging in and logging back on. Secondly, you can find our contact information below in the notes section. Please take some time now or during the webinar to jot down that information. There is also a full screen option of Adobe Connect if the images you see are smaller than you prefer. However, please keep in mind that this will disable the chat function. As a thank you for attending, this presentation is being recorded and everyone will receive a copy of the webinar recording sometime afterwards in a follow-up email. At this time, I wanted to mention current special offers. eSignal has a special offers page which can be found at www.esignal.com/specials. A few of the offers I wanted to highlight this time is we have a 30-day risk-free trial of eSignal Premier that you can try at this time if you're unfamiliar or are looking to try a different charting platform. Also, did you know that you can receive up to $100 per referral if you refer a friend to the eSignal platform? More details and other special offers can be found at www.esignal.com/specials. And today's special offer for today's attendees. You're the first to hear about this. For those of you who will be or are close enough to the Las Vegas or New York City region on either March 18th or March 25, Bill Corcoran himself will be the guest speaker for a free live meetup event. If you go to http://eyo.bettertrades.com, you'll see some details regarding the two special free live meetup events at Las Vegas, Nevada and New York City, New York. And for those of you who are unable to join us at those events, there's a $99 special that Bill will detail during his presentation time. I also wanted to highlight upcoming training and upcoming events that eSignal is offering. eSignal's learning page is at learning.esignal.com. And within those pages, you can sign up for various free webinar classes such as eSignal Basic and Advanced Training. eSignal 12 is our latest version. You can also learn classes on how to trade in Forex and futures. More webinar and events can be found on our eSignal learning page. And as terms of next week's event, we are featuring Ross Cameron from Day Trade Warrior, this channel, again on Wednesday to 11. And again, I wanted to highlight the special event where eSignal and BetterTrades are partnered to provide you a topic on Explore Your Options. Again, these are free live meetup events in Las Vegas, Nevada and New York City on March 18th and March 25, respectively. And you can register at that link provided to you on this page, eyo.bettertrades.com. At this time, I wanted to formally introduce Bill Corcoran from BetterTrades. Bill Corcoran is the CEO of BetterTrades, and he's an active trader in the equity options, futures, and Forex markets. Bill teaches trading education courses all over the United States, both in person and online. He shares his knowledge and passion daily with an elite group of options traders in his morning trading lab, where option strategies, technical analysis, and risk management are taught and executed in real time. Bill brings a unique perspective to his role as the CEO of BetterTrades. He came to the company the same way thousands of others did, as a student. Bill used the stock market education he acquired as a way to achieve his personal goals. He truly is a product of the product, and his message resonates with students who appreciate and draw encouragement from his real-life success story. During today's presentation, Bill will share smart options to mitigate losses, intelligent solutions to protecting your profits, how to find lower cost options when you trade, and more. Normally, I would ask you to hold off your questions during the webinar presentation, but Bill has asked that we want to make this an interactive presentation. So if you have questions in the middle of the presentation, please, by all means, put in the question through the chat box, which is located on the upper left-hand corner of this presentation, and Bill, in due time, will respond to your questions. Without further ado, please welcome Bill Corcoran from BetterTrades. And again, thank you for attending this eSignal webinar.
All righty, ladies and gentlemen, if you guys can hear me, go ahead and give me some sort of a sign there that you can hear the sound of my voice. I appreciate that. And looks like everybody can hear me. That's outstanding. All right. So I appreciate the great introduction there, Ben. That was awesome. And let's go ahead and move into the presentation. One of the things that I want to let you guys know is that I am here primarily and only as a teacher, as an educator, as a coach. Some of you know me and have heard this before. Others have not. I am a teacher. That's all I do. I'm a coach. I provide people with educational information and education that is there to share with people what kind of strategies traders will use in the markets. Understand that I am not a broker-dealer. I do not have license to give you specific financial advice. That's not my purpose at all. I'm here as a teacher, educator, coach. And I will use examples of real-time unfunded paper trades as a way to highlight, illustrate, and demonstrate the strategies I'll be sharing with you here in this workshop. So if you guys have any questions, by all means, feel free to ask them, but please understand, once again, that I am here solely in the role of an educator and a coach. So let's get into this a little bit, and let's see what we're going to be discussing today. Today I want to talk about option trading, and as I'm looking down the list of students, I see a lot of familiar faces in here, people that I've taught at workshops all over the country, but there's a lot of folks in here that I am not familiar with, some new names, which is great. We love to see that, and I want to kind of get a feel for the experience level in the class. So if you are a BetterTrades veteran, somebody says there, Wendy says, yep, BetterTrades veteran right there. All right, that's awesome. If you're an active options trader, then some of the stuff I'm going to cover in this class may be a little bit basic. We're going to touch on some more advanced strategies as we move forward. But if you're primarily an equity trader, right? If you're somebody who primarily buys and sells stocks, this information is going to be useful to you because I think there are ways that you can learn to use the options market to create more leverage and to create more opportunity in your trading by using options in several different ways. And one of those ways may be simply to go in and actually just trade the option. So we're going to talk a little bit about that. Let's talk about why you would want to trade options. How many of you guys are equity traders? Now this may just blow up the line here, and I'm looking through a lot of questions here. Went through the class a bunch of times. Dale did. That's awesome. So Guy does some stocks, options, and warrants. Excellent, outstanding. Michael says no options. Okay, so good. So we're getting a good mix of folks who are equity traders and some folks who understand. So if you are an equity trader, you're buying stocks. How many of you would like to be able to buy your stocks at a potentially lower price, right? I mean, buy it at the wholesale price as opposed to the retail price. And that's one of the advantages that our students have, is to be able to go in and buy stock at a discount. If you're buying the stock at 100, I'm probably not going to buy it there. I'm going to put it in an order that says I'd like to buy it at 95. And while I wait for the stock to get there, I'm going to get paid to wait for the stock to get there. So that's one of the advantages to trading options. How about managing risk? Anybody catch what went on in the market here this afternoon, late in the afternoon? Okay, anybody see what went on in the market? So Andy, Alan says yes. Some folks saying yeah. Okay, some of you may not have seen what went on in the market. We'll go in and actually take a look at this, guys. But if you're a long-only trader, today's market volatility towards the end of the market that came as a result of the ECB, President Mario Draghi, making some statements about the Eurozone not being willing to accept Greek bonds as collateral, really just riled the markets. And if you're a long-only equity trader, that can be scary. Those kinds of markets can be really scary. As a long-only trader, learning to trade options gives you some choices to protect yourself. You can literally insure your stock, and we're going to talk about that. How many people in here are just interested in learning to trade for less money? Anybody like the trading at a discount? Okay, some of you. All right. Some of y'all not answering. Some of you guys like to trade full price, right? You're like, no, I'll pass on the discount. I'll go ahead and trade for the full price. I'm going to say that's not most people, right? We want to buy those trading opportunities at a discount, and those are bullish and bearish, guys. So one of the advantages we have as option traders is that we can take a position with a similar risk profile, whether we're bullish or bearish on the stock. And that's just not something you can really do in the stock market. You can short a stock, but that carries significant upside risk. And so as an option trader, we can get into lower cost positions and strategies, which is great, but we can also do that on both bullish and bearish stocks and markets. And we can participate in less directional strategies. Has anybody in here ever been wrong on a trade? All right, a couple people saying yes. Okay, somebody said no. All right, I want to talk to you. I'm going to hang out with you because if you've never been wrong on a trade, either you're not trading or you're just that good. Everybody's been wrong on one, right? Some people saying, yeah, mostly. And other people saying regularly. Andy saying, I'm the champion of it, right? Okay, so you ever been wrong? There are ways to mitigate that and to trade using what are called spreads, which is another option strategy that we can use. Here's just a list, guys, and we want to pick the right strategy. We're going to talk about one specific strategy here today, but there are bullish and bearish directional trades. We can do vertical credit spreads, vertical debit spreads, strangles, straddles, calendar spreads, covered calls, selling puts, combination spreads or more structured spreads. So the options world, and I'm not really just using it as a pun, but options give us options. Does that make sense? We can do a lot of things in the options world that we cannot do as just a long-only equity trader. Let's focus on one strategy, and the one that, I don't know about you guys, but I like trading directional swing trades as part of what I do. These are shorter-term trades. Why would we like shorter-term trades? Okay, how many people in here are short-term, maybe swing or even day traders? Anybody like to trade those? Okay, I like that. Faster money. Okay, folks saying, yeah, they're doing some day trades and some swing trades. Yes. So the reason we like those directional swing trades is we might be in a trade like that for 3 to 5 days. We're looking for moves that are trends within a trend, if you will. Okay, they're short-term directional moves within a bigger trend, and we want to take advantage of those moves. We want to take advantage of those moves because I don't know about you guys, but if I buy a stock and hold it for 10 years, I don't get paid on that stock until I sell it. And where I'm from in Texas, my bills seem to show up more than once every 10 years. So I got to find something that gives me that money and that cash flow in a shorter term basis, and that's what we're going to be looking for. Steven says day trading offers more money. Steven, here's the thing. As an option trader, your view of that may actually change. So I'm going to challenge you to consider what I'm going to put out here, because oftentimes as day traders, we end up eating a lot of expense in bid buy ask slippage and commissions that you don't have as much of as a swing trader, and certainly have much less as a trend trader. So we're going to talk about some things, but obviously there's going to be risks involved if you're in those longer term trends. We can purchase extremely low cost options. Who would be interested in learning about extremely low cost? Okay, so Carl's got himself a strategy going on the spiders. I like that. Okay, he actually likes it better than trading futures. Interesting. All right, a bunch of people in here saying yes. All right, Hugh, Tom, Alan, Guy, Gary saying, yeah, show me how to buy extremely. Now, when I say extremely low cost, for those of you that are equity traders, it's going to make you a little uncomfortable, okay? Because some of you that are equity traders, if you're a day trader, you may be buying stocks that are trading in the $3, $4, $5 range, maybe a little bit higher. We're buying options on stocks. The price of the options are in that same range, but we're buying those on stocks that may be $200, $300, $400 stocks. And that creates significant leverage for our positions. We want to manage our risk, however, with stops, okay? And guys, the reason I like this is it gives us the opportunity to trade with the big boys. If you're an equity trader, if you're a long-only trader, you really may be prohibited, just from a financial perspective, of buying into big momentum stocks. And you guys know the kind of companies I'm talking about with big momentum stocks. As a short-term swing and even day traders, we got to find stocks, if we're going to play this game, that make moves quickly. I want to find stocks that move very quickly. Now, understand, guys, I'm not in any way, shape, or form saying that there are not risks involved in option trading. In fact, there are. And we're going to talk about those risks and how we can work to manage and mitigate those risks. But let me ask you this. Are there risks in trading stocks? Oh, yeah, there are big risks involved in trading stocks. A bunch of people saying yes, okay? And somebody was saying that the United Kingdom is much more restrictive on trading for individuals if you're not in a corporation. So are you in the UK? That's interesting. So we're reaching all over the place here. So check out some of the stuff we got going on with options, guys. We want to find the right combination here. And what I'm going to show you is that option traders can potentially benefit from a very powerful combination between the right stocks and the right kinds of options and option trades that we use here at BetterTrades and that we teach our students. We want to find volatile stocks, stocks that move a lot. We want to find stocks that move with good patterns. Okay, so Stephen is in the UK. Outstanding, Stephen. Well, welcome. We appreciate you coming into class. We want to find the right strategy that exploits that price movement. So I'm looking for stocks that move a lot. And when I say move a lot, I like stocks that move 3, 4, 5, 8, 10, 12, $20 a day or more to play these option trades on. We want to manage our risk aggressively, and option trading allows us to do that in some pretty unique ways. You cannot do as a long-only equity trader unless you're using options as part of your risk management plan. And there are defined risk strategies that we can set up as well. We want to put this whole mix together, mix it up in a bowl, and we're going to come up with the right kind of strategy. Now, when I mentioned the stocks, several people said, okay, so what stocks are you looking at? Would anybody like to know what kind of stocks I'm talking about when I talk about the right kind of stocks for short-term option trading? Anybody want to, maybe a list? Okay, a couple of you saying yes. All right, so it looks like we got a bunch of people that would like to. All right, Willis is saying, yeah. Willis, how are you, sir? Gary says highly liquid. Okay, some of them. All right, we want them to be liquid. We have certain criteria that we want. How about this? How about if I just give you a list of ones that work out? Does that make sense? Instead of just giving you all the criteria, we'll look at a list of potential candidates. And please understand, there are others that we look at on a daily basis. We actually scan for them using several of the tools in eSignal to do that. But guys, stocks like Apple, Amazon, Baidu, Facebook, First Solar, Green Mountain Coffee Roasters. Anybody see Green Mountain Coffee Roasters today? Beautiful technical setup. We're watching it here in a class that we're teaching in Atlanta. We're actually teaching at our mock trading floor. We've got a trading floor in Atlanta where we bring our students in, spend 5 days with them. We did some trades on Green Mountain Coffee Roasters. We've been into trade on Apple and Amazon for a couple days. Google, we like to trade the L series. So I don't know if you guys were aware that you can actually trade two different Google stocks, right? There's a voting class and then there's the non-voting class. So you can trade either one of those. Tesla, really volatile stock there. Netflix. How about Priceline? Anybody trade Priceline in here? Right? I mean, stocks trading, $1,027 a share. How many shares you gonna buy? Right? If you're a long-only equity trader, Priceline is a little tough to trade when you're dropping a G for every share that you buy. You can buy of that. Dale says 3. He's going to do 3 of them. All right. So you think about it. 3 shares of Priceline is going to cost you $3,000. That's just crazy. Now, behind, we'll see if we can fix that for you, right? All right. So let's see there. Somebody said they had 3 of them on the list. So let's go through and talk about the magic of options trading. The magic of options trading, the things that we want to look for. Now, again, I understand that there's some folks in here that are a little bit more advanced, and some of the things that I'm going to cover with you are going to seem very basic here, but that's going to be important to get everybody up to speed. And then as we move forward, if you guys have questions on more advanced strategies, I'm very willing to share that information with you guys. Let's see. Dale says I trade 3 of them on the list. Awesome. Nick's asking about index options. Nick, I don't do a lot with the index options. We will from time to time trade on the index itself. Now, a couple reasons. The indices are settled different than the equities are. So from a settlement perspective, there's some differences in there. There are ways, if you want to trade on the indices, you can trade obviously the ETFs, the spiders, for example, on the S&P, or the Qs on the NASDAQ, and we can do some of that. Okay, so as far as trading the index itself, we don't really do a whole lot of that. Guy says CFDs. All right, so guy, I'm gonna have to admit I got no clue what you're talking about. I mean, is that some kind of fire department? All right, let's see. Okay, so some of the gas stocks might be good. Let me go over the basics of what an option is, because as I'm reading through here, it seems like a contract's for difference. Okay, I got you. And that's going to be on the cash settlement, covering the basics. So we're going to go through the basics here, guys. Again, this is going to be just a review for some of you, but for some of you that are just long-only traders, this is going to be some new information for you. I want to make sure that we at least have the basics before we go in and talk about how we execute these trades in the eSignal environment. We use the eSignal platform to do our options execution training and trading here at BetterTrades, and our students, in fact, here in the trading room in Atlanta, we've been using the eSignal platform here now for about 5 months now. And very powerful platform. So let's go over the basics of options, and then I'll go in how we actually go in and set up option trades in the eSignal environment. An option is nothing more than a contract, guys. It's a contract between you and the market maker. There are two types of these option contracts: call options and put options. As the buyer of a contract, you are given certain rights. So as an example, if you buy a call option on Apple stock, you are buying the right, but not the obligation, to buy 100 shares of that stock at a specific and agreed upon price for a set period of time. Now, some of you may look at that and say, okay, I kind of see what you're talking about there, but it doesn't look like anything that I've done before. How many of you have never, ever done any kind of options trading at all, and you're thinking, you know what, we need to really break this down to the basics here. Okay, Michael, Roy, Alan, Cal, wow, a bunch of you. Okay, all right. So if you've never done this, you might be a little bit surprised to know that you have done this. All right. In all likelihood, you have already done this, maybe not in the stock market, but you've done this in other areas. And what I'm talking about is real estate. If you've ever been party to buying or selling a house, you have been involved in an option contract. Let me give you this example, and this may help you out. You go out, you're looking for a house, you find this $200,000 house, you say, you know what, I like this house, I'd like to buy it. Lucky for you, it's on sale, it's $200,000. Now, you're not just going to go out and write a check for that house, you're going to need a little bit of time. So you would enter into a contract between you and the seller of the house. Isn't that normally how it works? Right? So that's how it would work. You would write a contract, and so you would pay the homeowner a little bit of earnest money to buy that contract. Let's say in this example, it's $2,000 that you are paying for the right to buy the house for $200,000 for a set period of time, let's say 90 days in this example. So you write a check to the homeowner because you like his house and you want to buy his house, but you're going to need a little time to do your due diligence. So you're going to go in and you write a check for $2,000. You now own the contract, which gives you the right to buy the house for $200,000, and he can't sell the house to anybody else during that period of time. So just to review, the homeowner, he's got certain obligations. You have certain rights. You have the right to buy the house, agreed upon price, $200,000 for a set period of time, 90 days. The seller of the contract, the homeowner, he's got certain obligations. He can't sell the house to anybody else during that term, and he's got to deliver the house to you at the agreed upon price as long as you exercise your right on that contract before the expiration. If you don't buy the house, he gets to keep the $2,000. All right, everybody with me? Well, guess what? Great news comes out. A few weeks later, you're driving by the house, you've been calling the bank and getting your financing together, and you find out that, hey, there's a golf course going up behind that house. All this construction, you say, you know what, that's going to be exciting because I think what's going to happen to the value of a house if it's now on a golf course? Let's see, Michael says, can I buy the house before the 90 days? You most certainly can. You can buy that house before the 90 days. And let's see here. It says somebody said they lost sound there, so you guys just make sure that you can still hear the sound of my voice. We're still coming across here. Yeah, okay, we're good. All right. So you can buy the house at any time up to that 90th day, but as you're driving by, you see that there's all this construction, there's a golf course. What's going to happen to the price of a house on a golf course? Price of a house is going to go up. You check with your broker, you find out, hey, guess what? That house is now going to be worth at least $400,000. You have the right to buy the house for $200,000, and that homeowner, he can't sell the house to anybody else during the contract term. Now, here's the sad part of the story. He loves to golf. You don't want to live on a golf course. You don't want to deal with a golf course and golf balls flying through the windows and the kids having to wear helmets out in the yard. You're not all that excited about it. He would be excited. Is the homeowner going to be upset that there's a golf course going on behind the house? Oh, yeah, he's going to be upset. Why is he going to be upset? He's got to sell that house to you for $200,000 if you choose to exercise that right. He's always wanted to live on a golf course, and now he can't. So you're thinking to yourself, you know what, I could buy the house and sell it for more after the golf course is finished, but guys, that's going to take that big money, and is there some risk in doing that? If I buy that house for $200,000 and as they're building the golf course, they find out that, hey, guess what, that golf course is sitting on an old city dump, now that house's value is going to go the other direction. So there's some risk in buying the house, and you don't want to live on the golf course anyway. If only you could find somebody who wants to live on a golf course to sell that house to. Do we know anybody that wants to live on the golf course? Yeah, we know somebody who wants to live on the golf course. The homeowner wants to live on the golf course. So you go to the homeowner and you say, listen, I know you want to live on a golf course. You've always wanted to. You're going to lose $200,000 equity if you sell this house to me. I could buy it from you for $200,000, sell it to you for $400,000, and pocket the change, but neither one of us wants to go through that. How about this? I will sell you the contract that I bought for $2,000 for $10,000. Now, what do you think the homeowner is going to say? The homeowner is going to say, I want to go ahead and buy the contract, is he not? He's going to say, I will buy that contract. He buys the contract from you. He keeps the house. You make $8,000 on a house you didn't even own. Does everybody understand kind of how that contract works? Everybody good there? Well, if you understand how that contract works, ladies and gentlemen, you understand how a call option contract works in the market. Just replace the word stock into where you were using the house. Replace the word house with the word stock, and you understand how a call option works. Let's look at an example with a stock, shall we? You got a stock that's trading at $96 a share. Could we buy this stock right here? If we're a long-only equity investor or trader, we could come in, buy this stock. How much will it cost us? It's going to cost us over $96 a share. But instead of buying the stock, let's buy the option contract on the stock for $3. So you could either buy the stock for $96 or you could buy the option for $3. Which one is less? I'll give you all a minute to think about it. That'd be the $3. I kind of like the idea we're buying an option contract just like we did on the house for a whole lot less money. Well, good thing that we did, because 7 days later this stock rockets up to $105 a share. What could we do with the stock if we bought it at 96? We could sell the stock. We'd sell the stock for 105. And those of you that are equity traders, you understand this. We buy the stock at 96. We sell the stock at 105. We make the difference. That's our profit. But what if we had done it as an option trade? The stock price moved up. The option we bought for $3 goes up in value as well, in this case to over $11 a share. Well, let me ask you this. If you bought something for $3 and it's now worth $11, what do you think you ought to do with it? Sell it. You want to sell it. Now, guys, that's a significant advantage, is it not? You could sell that option for $11 a share. And somebody asks, well, Bill, do I have to pay the difference between the $3 for the option and the $96 for the stock price? And guys, the answer is no. In fact, remember the option example we gave with the house. I bought the contract for $2,000. I sold the contract for $11,000. I made the difference in profit. Does everybody see that? Kind of exciting. Let's look at a side-by-side comparison. $96 per share means $96,000 invested for 1,000 shares. I sell it for $105 per share. That's $105,000 for 1,000 shares. I made $9 per share profit. And I don't know about you guys, but that's pretty good, is it not? $9,000. That's a 9.3% return in a week. Now, how many of you equity traders you just love a trade like that? How many of you option traders would love a trade like that, right? I mean, that's smoking. Love it. We're making a 9.3% return. How about when we buy the option? We pay $3 per share. That's $3,000 for 1,000 shares. Now, options are sold in contracts of 100, so here we would be buying 10 contracts. We sell it for $11 per share. That's $11,000 on our 1,000 shares, making us an $8 per share profit. Now, I don't know about that, guys, but that to me seems pretty exciting. Now, just on a pure cash basis, who made more money? Who made more cash? Okay, you guys are already excited about the option. Some of you saying the option trader did, and it's actually the stock trader who made more cash, right? He made $9,000 as opposed to the $8,000 profit that the option trader made. But what's the rate of return? Well, here's the thing. It's how about if we just call it a lot? All right, I'm over here trying to figure out, do the math, can't do it in my head. I'm just going to call it a lot. How about if we call it a lot more than 9.3%? Because if I buy something for 3 and I sell it for 11, I mean, I'm not all that good at math, but I know if I sold it for 12, I'd be making a lot of money. I sold it at 11, that's just a lot. Everybody good with that? It's approaching a 300% rate of return for those of you that are wondering. Troy is not wondering because he says it's 333% rate of return. Okay, I like that. But options are risky. How many of you guys have ever heard that options are risky? All right, so Dale says, yeah, I've heard that. Deborah says, I've heard that. Hugh says, yes. Cheryl says, yes. In fact, if you even mention the word options around certain mixed company, you're likely to get tossed out of the party. Because people's belief in options is that options are risky, and here's the truth, options are risky, but so is a chainsaw if you don't know what you're doing. So you've got to learn how to use the information, otherwise you're going to cut your leg off. Does that make sense? A chainsaw is a powerful tool that allows us to chop a tree down in a lot less time, but if you don't know what you're doing, you're going to hurt yourself. Let's take a look at what happens if, for example, the stock goes down. Okay? If the stock price goes down, the option price will also change. All right. Let's say the stock goes from $96 a share down to $86 a share. Now, if you bought the stock at 96 and it goes to 86, are you going to be upset? Would anyone upset? Anyone? Guy says, best not to mention that you're in the markets at all right now. Yeah, I know, because people started asking you if you're okay. Right? What's funny about that is that as an option trader, we actually make money faster, and we tend to make more money in a bearish market. We'll talk about that a little bit later. Stock drops to $86 a share. Are you going to be upset? Well, let me ask you this. You lost $10 per share. Are you going to be upset? Of course you're going to be upset. If you're buying the stock, you're going to be more than a little upset. Right? You're going to be angry. You're going to be mad. Guy says, not if you used a stop. I love that, guy. That's a great point. But let's say that your stop was at $86 a share. Now you lost $10. That hurts. What about the option trader? He paid $3 per share. If the stock drops to $86 a share, his call option price is going to drop and realistically could go all the way to zero. That option trader could lose every penny that he's got in that trade. How much did our option trader lose if he bought the option at $3 and it went to zero? Lost $3 per share if you do nothing. Oh, now hang on a minute. If you do nothing, you lost $3 per share. But Guy, you said earlier if you buy the stock, you would put in a stop to avoid losing money on the stock. Do you guys think that you could do a similar strategy on the option? And the truth of the answer is yes, you can. You can manage risk in option trading very similar to the way you manage risk in stock trading, which gives you a significant advantage. But let me ask you this. If you bought the stock at 96, it goes to 86, you lost 10, the option trader lost 3. Who lost more? That's right, the stock trader lost more money. Let me ask you again, what if the stock continued to go down? What if our poor stock trader got caught up in that psychological trap that I'm sure nobody in this class has ever done, but you may know some people who have done it? It goes something like this. You buy a stock because you think it's going to go up. The stock doesn't go up, it starts to go down, and you say to yourself, well, of course, it needed to retrace, so I'm going to hang on to it. The stock goes down a little bit more, and you say to yourself, well, now it's got to be getting ready to go up, so I'm going to hang on. It starts to go up, you're excited, and then it plummets on a day like today, and now it's down even more. The stock's at $76 a share. At $76 a share, how much has our stock trader lost? Yeah. Now you're down 20 points. That's starting to hurt. How much would our option trader be losing now with the stock plummeting to $76 a share? It's still the same $3. As an option trader, you can't lose if you are a long option buyer. If you're a buyer of options, you're not going to lose more than what you have in the trade. And that's if you do nothing, but we're not going to do nothing. We teach our BetterTrades students to manage risk, and it's mandatory. For our purposes, one of the strategies that we teach as a cash management strategy is that we define our risk on a directional trade as the expected loss if we're stopped out or we realize our projected loss in that example. We don't want to have more than 2.5% of our total account value exposed to risk in any one trade. This is stuff that I teach in classes all over the country. Myself and the other instructors here at BetterTrades, we go out and we teach these kinds of things all over the country. In fact, just today we were talking about the 2.5% rule on directional trades here in Atlanta. We're going to be teaching this in classes going forward. So we want to make sure that we understand how to manage that risk. Now, I'm not going to turn this into a technical analysis class because I have mentors of my own who are far better at that than I am and taught me more than I could ever teach you. So let's keep just the idea that you have to keep technical analysis in mind because you're going to analyze the charts, but we're going to manage our risk based off of the charts and then convert that to the 2.5%. Okay? When we talk about technical analysis, without getting into a whole lot of detail here, guys, what I want to do is I want to look at stocks in multiple time frames. Carl says a stock might be a good buy at 86. Carl, if the stock is a good buy at 86, I'm not going to buy it at 86. I'm going to let the market decide if they want to sell it to me at 85 and then pay me to wait around for it to get there. Right? Anybody here buy low, sell high, right? That's what we're supposed to do in the market. Have you ever heard that, Carl? Carl says, yeah, good point. How about this? How about if we buy lower and then sell higher? Instead of buy low, sell high, let's buy lower and sell higher, and we're going to do that. Okay? Scott says, I love being paid to wait. Excellent, excellent. So when we talk about technical analysis, we want to consider things like candlestick patterns. We want to look at the weekly trends and indicators, daily trends and indicators, intraday price movements to time our entry into a trade, and then always being on the lookout for divergences in some of the oscillating indicators to do that. Yeah, exactly, Marcia. That's exactly how we would get paid to wait. Now, we've gone through a little bit of basics of how what an option is. We've talked a little bit about buying a call option on a stock that might move up. Those of you that are using the eSignal platform, the eSignal platform allows us as option traders, if you're trading with the eSignal Premier Plus, you have access to options, and we can actually execute option trades in the eSignal platform. So actually went through and took some screenshots of some of the trades we were looking at today. Very nice, Carl. Carl talking about an advanced strategy. He says, I'd rather sell a put spread, use the money from that to finance a long call, and if it got down to a buy point. Okay, so interesting strategy there. And a little bit more advanced one that we actually talked about, a version of that today, Carl. Have you ever heard of a synthetic long? Very similar to what you're doing, but instead of doing the put spread, you're essentially just going naked to put and using that to finance an at-the-money call, creating a 1 delta exposure in the trade. Cool stuff. All right, so we just went from basics, like we went from kindergarten there to grad school. All right, I'm going to reel it back in. Let's go back and let's talk a little bit about going in and looking at how eSignal breaks out the options, guys. In the eSignal Premier Plus, you have an option chain. So if you're looking at how do I go out and buy these options, where do I find them, right? I mean, we all know where to go find a stock. It's at the stock market. Some of y'all might have heard of this place. that would be where you go buy a stock. But where do we go for the options? We obviously are going to buy them on the options market, and where we find those is in what's called an option chain. The eSignal option chain, this is one example of an eSignal option chain that's available to our BetterTrades students through a cooperative effort that we have with eSignal, where we make available some pretty cool stuff to our BetterTrades students who are eSignal customers, and we make our trade setups available to our students. So we went in and we built out this option chain in conjunction with eSignal. Let me just show you a little bit of what we're looking at here. You've got different option strike prices. That's this area right here in the middle. And those are the contract prices. So remember when we bought the house for $200,000, or we bought the right to buy the house for $200,000, the strike price in that example was $200,000. If we want the right to buy Apple for $113 a share, we would buy the Apple 113 call option. Let me zoom in and kind of show you guys what I mean by that. So this is a zoomed in version of just the call options here that we're going to be looking at. So the 113 call option right here, we can see this call option right here. That's the 113. We're agreeing that we would like to buy the stock for 113. Okay, for 113. All right. Yes, you can toggle the option chain between ascending and descending orders for the option chains if you want to. We'll go right into the eSignal platform in a minute, guys, and take a look at the actual platform and show you some neat things that you can do there that make it very, very user-friendly. Obviously, my time is limited, so I don't have a whole lot of time here to go through with you guys. You guys heard earlier when Ben was talking about a live class that I'm going to be doing in Las Vegas and New York. It's a live 4-hour class, and the students that are going to that are going to have the opportunity to sit down with me for 4 hours in that meetup, and we're going to just talk about the eSignal trading platform. And if you've got questions on options, you want a little bit more information on them, I'll cover some of that there as well. But can you toggle between, can you rearrange the options? There's all kinds of stuff you can do in here. Very usable platform. So we've got the strike prices over here. These things over here, this is going to be some of the option Greeks. I'm not going to get into that here. That's how options are priced and actually how the measure of what happens to the option price based on some external components there of the option pricing. And then eSignal's option chain actually is color-coded. So it tells us whether an option is in the money, near the money, or out of the money. Now, those are terms, again, that if you're not an options trader may seem a little bit strange to you. What I'm going to tell you is this: learn them. It's very important in selecting the right kind of option for the time frame that you have, that you identify whether this is a strategy calls for an at-the-money option, an out-of-the-money option, in-the-money option, and so forth. So let's go in here for those of you that are equity traders and just show you a couple things that may look familiar to you, like the bid and ask price. Okay, the bid and ask price. Let's see, Yannick, yeah, we do have a workaround on that. Will you be doing any trading at the meetups? Daniel, we're doing the meetups from noon to 4 p.m. so that we can catch some market activity in there. Obviously, in Vegas, we're only going to catch about an hour of it, and then in New York, you're going to catch 4 hours of it, right? So we are going to be in teaching during actual market hours. If you would like, we can jump in and do some examples of paper trades to show you how to use the platform there. Does that make sense? Okay. Carl says you live and die on the spread. You can. There's no question. So that bid by ask spread is familiar to you if you're an equity trader, because we buy at the ask, we sell at the bid, or the easy way to remember, we always get the price we don't want, right? That would be the easy way to remember that, the bid and ask. The other important thing here for an option trader, especially in the beginning, is the strike price. The strike price is going to be that price where you are going in and agreeing, in the case of a call option, to buy the stock. So if you look, we've got the ask price. That's where we would buy an option. And the strike that we're going to select based on several criteria that I will introduce you to in Las Vegas and New York. In the eSignal platform, very easy for us to buy an option, similar to what you would do buying or selling an equity. You simply double click on the asking price, and when you do that, it's going to bring up your order form. Okay, it's going to bring up your order. Daniel says, sounds good. All right, excellent. Glad to hear it. So there's you're just going to click right there on the asking price. That pulls up the order form. This is what the order form looks like. Those of you that are using eSignal for your equities trading, you're familiar with this, but we're going to use it to trade an option. So the ticker symbol for the options in the upper left-hand corner. And you can see that this order ticket is set to buy, and we're going to buy at the ask, currently at 7.15. And I've got a limit price set in here, but I have a quantity of 0. And when you first start doing this, we encourage our students to set the limit to 0, the number of contracts that you're going to buy, so that you don't accidentally hurt yourself. Does that make sense? Anybody ever buy too much? No one? It's just me? All right. If you start out with 0, you actually have to make a conscious effort. You have to think about, okay, how many contracts am I going to buy? And here at the Traders Intensive in Atlanta that we're doing the 5-day in the trading room, we've been talking about how you determine how many contracts to take on based on the risk in the trade if you're stopped out. That 2.5% rule, again, something that I can spend some time fleshing out as we teach that class in New York and in Las Vegas. So, well, let's just go back here real quick. Make sure that you guys are all good on this one. Does everybody understand the order ticket? Can you use the option ticket to buy and sell spreads, Carl says. So, Carl, right now what we do is we actually leg into those spreads. We do have a workaround that we've been using here at BetterTrades that allows you to build out the entire spread all at once and enter the whole spread. Okay, so some other stuff there that we've got the ability to do over here. Guy says, so you set up an account inside the software. So, Guy, with eSignal, what you do is you select the broker from the partner list of brokers that eSignal has, and that broker then actually executes the trade, but your research and execution from your end occurs on the eSignal platform, right? So you would set up an account, your money would be there in the account, and that's how you would execute that trade. So here, I would be buying now. I might change this to 10 contracts. I might change it to 1 contract, whatever's appropriate for my risk, understanding I'm paying $7.15. Now, who was it? Guy, was it you? Somebody said that we would never want to trade that stock without having a stop in place, because we don't want the stock to go from 96 to 86 and we not have a stop in place. We end up losing a whole bunch on that trade. And so, yeah, so it was Guy who said that. So, Guy, how about if we learn how to do the same thing with our option trade? Does that make sense? That we would go in and execute an order to sell at a stop. So we simply go through the same process here, guys. We would locate the position that we were in. We would set the order as a stop order and our stop price. So in this example, I want to set a stop in order to exit the trade if the option price drops below $6.30. So I am willing to have the trade go against me by a certain amount. Now, how much am I willing to let it go against me? How far? When do I get out? What could cause the price to go down? Those are all things that start to dive into some of the important, deeper understanding of option trading that you might want to learn at the workshop. Guy says, can we set the stop as a trail? You absolutely can. In fact, if you go up here where it says order type, you can set up a trailing stop. You can set up different types of stops. In fact, the eSignal platform allows us to do money management strategies, which are pre-planned structured exit strategies that allow us to get in and have our exits already set up on both the top side and the downside if we're trading that. Okay. Can a stop be set on a spread? Greg, what we do for our spreads, depending on how you want to do it, is we effectively do what's called a delta conversion. So without getting too far into the weeds here, if I have a 50 delta option, that means that the price of that option will move 50 cents for every dollar that the stock price moves. So if I know that the stock gets down, let's just call it goes $2 against the direction I thought it was going to go and starts to threaten my spread, I could get out at a dollar change in the option price because of the 50 delta. That would be one way to set your stop on a spread. The other is to use the eSignal alerts capacity to be able to do it. Now, here's what I'm going to tell you guys, and it may surprise you. I'm going to tell you, don't do it, right? Don't go out there and just be like, oh, okay, well, I've been to Bill's 1 hour option trading class. I'm ready to go out and trade options. You just know enough right now to be really dangerous. Let's not go out and do something like that until you understand the risk, because there are unique risks in option trading, ladies and gentlemen. How many of you guys are excited about the leverage that we talked about, or the lower cost to the options that we talked about? Is anybody excited about the fact that instead of buying Apple at $107 a share, we just buy an option on it, right? Okay, so folks are say excited about it, but there are risks that I haven't even begun to scratch the surface on. Your option is actually going to lose value over time, even if the stock price doesn't move at all. Whether it moves in your favor or not doesn't matter. A certain part of that option's price will deteriorate because we are approaching the expiration. Options have a finite expiration, and as a result, something called time value, or often referred to as extrinsic value, can impact the price of your option. There are unique risks to options trading that if you don't understand it, it is easy to lose money and not even know what happened. All right, those of you that are option traders in the room, how many of you have ever had a situation where you bought a call option, the stock price went up, and your call option did not go up, right? And you're like, I don't even understand what was up with that, right? A guy says, yeah, in the beginning. Tom, Connie, got a lot of people saying, yeah. So you've got to understand the unique risks that are involved. Option price behavior can be erratic, especially if you select the wrong option strike and expiration combination. Okay. Behind says, I want to learn to sell to open some options to mitigate some of that risk. Absolutely. Okay, so you got to learn a set of option criteria that will work to minimize these risks. And guys, this is what we do here at BetterTrades. We teach specifically option trading. We teach folks the risks that are involved, the potential rewards, how to mitigate some of those risks. And I would encourage you to look into what we teach. We teach a set of option criteria, several of them, depending on certain market conditions and strategies that will work to mitigate and minimize those risks. Okay. Other things you can do with options. Okay, we talked earlier about buying a stock at a discount by shorting a put option. We would sell a put option. All right, and how about generating cash flow with covered calls? If you own a stock, how many of you guys would like to rent that stock out? We do that with covered calls. Managing downside risk with a long put. Mitigating trading risk on long option positions with short option positions. Now, I've been talking about this class that's coming up, and I've got to ask you, who do you know? Let's see. Derek says, can you use this platform in Canada? Derek, my understanding is that you can, in fact, use the eSignal platform in Canada. There's some things you may have to set up there, and I would work directly with folks at eSignal, or you can give us a call here at BetterTrades. We'll help you get it set up, and our tech support folks can help you over here as well. Interesting. Guy says he's got a set of criteria for how far out in time he's going to buy his options. Okay. Guy says you can't do all this in the UK. Wow, that's too bad. You could move. I'm just kidding, Guy. Yeah, and I've heard that before, that there are, and it's one of the reasons that, in a lot of the foreign markets, the forex trading is very popular, right? All right, let's see. Yep, Byron says you could do it through a corporate structure. Guys, who do you know in Las Vegas? Anybody know anybody in Las Vegas? Anybody near Las Vegas? How about this? Does anybody like to travel to Las Vegas? Okay, it's just me that likes to go to Vegas. Oh, there we go. So Connie says, I know my nephew. So Connie, I imagine we'll see you there, right? Willis says, I know some people. Sandra, excellent. We do, Carl. And in fact, we're getting ready to go into some classes on that. Guy says, I'm not sure I'd ever leave. All right, that's what I'm talking about, Guy. You and I need to go to Vegas. Come meet me in Vegas Wednesday, March 18th. It's a half-day Explore Your Options live class, guys. This meetup's going to be exciting. If you can't make it to Vegas, there's a half-day class coming up in New York. Write down these dates. Make sure that you've got these dates, because you don't know what's going to happen. You might find an airplane ticket sitting around that you haven't used, or you decide that you don't really want to go to work that day. Come in, spend some time with me one-on-one, where we can literally be in class, and hopefully it's one on many, where we're going to be in there with you guys and talking to you, teaching you. You can ask questions, and I can go through this stuff live. I mean, the market's not open now, so it doesn't make a lot of sense for me to pull some of this stuff up and just show you what might have worked. If I can get you into a class for 4 hours, we spend some time talking about the options. Bahani says, I will be there in Vegas. I love it. Steven says, I would love to go to Vegas. All right, Steven, Southwest Airlines, right? And there you go. Once you go to the half-day class, how much is a big class? You're using this class to sell. All right, Carl, I'm going to charge you double, all right, just for asking the question. How do you like that? All right, so here. How about if we focus? Carl says he's laughing now. All right, I like that. How about this? How about if we talk about how much this class is going to be? I haven't even told you how much this one is yet, right? Normally, a class like this might cost you hundreds of dollars to attend. It's a live class. You got me right there. I'm teaching option pricing, option structure, option selection. This class, guys, I'm giving to eSignal students for free. Okay, I've decided to go ahead and just make this half-day class available for you for free. No obligation. Don't worry, Carl. You don't have to buy anything. You can come hang out with me. You can ask me questions. Willis says, no-brainer. Love that. Wendy says she'll be at another class in Minneapolis. Well, I can see why you'd want to be in Minneapolis. I mean, the weather's going to be much nicer there than it is in Vegas. It's free. It's a free class. Come on, come to Vegas, guys. If you're interested and you want to register for the tickets for this, again, the URL that you were given at the beginning is EYO, okay, which stands for what? Explore your options. When they first gave me this, I was like, EYO, what's that? And then I put two and two together. It took me a little while, all right? Sometimes I'm not the sharpest in the box, and I guarantee you if I can figure this stuff out, y'all can figure this stuff out. EYO.bettertrades.com. Go there. They're going to take you right to the page. You can get your tickets there. And again, like I said, it's free. Now, some of you are saying, well, what if I can't go to it? Carl, here's what I'm going to tell you. Some stuff has changed, all right? You may not know this. The person who's teaching the class in Las Vegas and New York is actually the CEO for BetterTrades. All right, I'll just let you in on a little secret there. So the person teaching the class there is the CEO, and that would be me. All right, so come on, Carl, come see what's new, and we'll get it going. Some of you asking about the eSignal platform. How much is this class going to be for an eSignal student? Is there going to be a special offer for the platform? Guys, there's all kinds of stuff going on. Let me point this out to you. Some of you, there's just not going to be any way that you can make it to the class. I get that. I understand. Some of you may not want to go to Vegas because the weather's so much nicer in Minneapolis or whatever the case may be. So come join me online. I'm going to do a live online version of this class, and that one's coming up here real soon, guys. That's February 18th. Obviously, I would rather have you in class with me live and in person so that we can interact. You can ask questions. I can ask you questions, get to know a little bit about you and what your goals are, and we can see which of the option strategies fit your goals the best. Normally, when I do a 3-hour class, $295. This is going to be a 3-hour online class, and guys, that's coming up like next, like in a week or two. Wow, that's coming up in a hurry. Okay, so I guess there's the deal now. Here's the deal. I'm not going to charge you guys $295 because, again, this is an eSignal special. $99. You go to the same place to register for that, eyo.bettertrades.com, and you just scroll to the bottom of the page. You can register there. Okay, so we're going to do some Nick asking about eSignal's option analytics tool. Yes, Nick, and in fact, the BetterTrades students are getting ready to start seeing that, and we're going to have some classes on that tool as well. Give you an idea of some of the stuff that our BetterTrades students do. Tom is typing in here. He says, last Wednesday in the morning lab, we did a defensive debit spread on an Apple selling the 118, buying the 123rd, and buying a 116 put. He said he rolled up to the 119 call when it moved against us, sold the 118, and kept his losses to an absolute minimum. Okay, so he said, keep it in mind when we talk about it in the lab. Love that. So how about this? Does everybody know if you trade in the market, you're going to lose money? Is everybody aware of that? So if we're going to lose, how about if we lose as little as possible? Does that make sense? Love that. All right. So, guys, there you go. That's what we got for you guys. Now, here's the thing. We have a version of the eSignal platform that we use to teach our students. Our students have access to it. We actually add a little plus to the plus. Right? We teach options trading. For eSignal customers who are BetterTrades students, all of our instructors provide our students with our trade setups, our chart patterns, our templates, some of the scans that we use, some of the stuff that we use is included in the eSignal platform. That's only available to people who are eSignal users who are also BetterTrades students. Those of you that go to either the live 4-hour class, the live 4-hour class in Las Vegas or New York, or you go to the live 3-hour online class, we're going to extend that offer to you guys. Now, I'll tell you about that offer in those classes, and you're going to get an opportunity to get some additional stuff at what I'm going to tell you may be a better price. Okay, so pretty exciting stuff going on there. Those of you that are BetterTrades students who are looking at the eSignal platform, take advantage of the opportunity. We're going to get you upgraded to it, and we can take care of that. Any other questions here as I move forward towards the end of the presentation? And let me just throw the disclaimer up there in case you guys want to read every last word of it. Dennis is typing a question in here. Scott says he agrees. So a lot of great stuff here, ladies and gentlemen. Did you guys enjoy the class? Did you guys learn anything in class? Anybody, any big aha moments? Maybe you learned that you didn't know what you didn't know. Okay. Okay, so yeah, awesome. All right, very good. Yeah, Larry, for those of you who are BetterTrades graduates, it is. And Amy says, thanks, Bill. A great class. I appreciate that. Brenda says, learned a lot. Las Vegas 318 event. Okay, so Dennis, we'll see you at the Las Vegas event, at the meetup event. Ladies and gentlemen, it has been an honor to come out here and spend a little bit of time with you guys. Just literally scratch the surface of what you can do with options and option trading. I appreciate the opportunity. Is market liquidity guaranteed by the market makers just like stocks? Yes, it is. How do we sign up for the free class? Jermaine, if you go in and go to, again, that EYO.bettertrades.com, you'll be able to get all the information there, or just give us a call at 800-676-4410. We'll get you guys taken care of if you have any issues there. Again, that's 800-676-4410. Good stuff. Many thanks. Thanks for the effort. So, ladies and gentlemen, if you learned some stuff here, come hang out with me in Las Vegas or in New York. Learn more. If you can't make it to either event, make it to share some more information with you guys. And Ben, okay. So Ben's saying for the free trial, just go ahead and get online and give us a call. Cannot make the Las Vegas event, so get online and get to the live online event, guys. All right, ladies and gentlemen, my time is over. Genuinely appreciate the opportunity to spend time with you guys. Look forward to doing it again in the near future. If you guys would like me to do more classes or have my some of our other instructors come in and do classes, we'd love to do that as well. Until the live event, I wish all of you all the success in the world. Happy trading, Godspeed, God bless, and we'll talk to you at the live event.
Thank you, Bill. Let me go ahead and formally close out this webinar. As a reminder, the notes section indicates the contact information for BetterTrades as well as eSignal, as well as today's special promo. We're hoping a lot of you can join Bill and his team in Las Vegas on 318 or in New York on 325. I would like to thank Bill for taking time out of his schedule to spend time with us. I would also like to thank all of you for coming to today's webinar. I hope you found this webinar beneficial. If you have any follow-up questions, again, please do not hesitate to contact BetterTrades or eSignal. We'd be more than happy to answer any questions you may have. And as a reminder, you will be receiving a recorded copy of this webinar as a thank you for attending. We hope you have enjoyed today's webinar with Bill Corcoran.